This program is brought to you by First National Bank of Botswana.
FNB, how can we help you?
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At FNB, we're constantly innovating to help business owners at every stage of their journey.
The relationship between Botswana and South Africa is one of an unbalanced seesaw, where the give and take as far as imports and exports is far from being at equilibrium. Botswana's economy and the livelihood of her people rely heavily on South Africa. According to online business publication Trading Economics, South Africa accounted for 67.4% in total imports by the end of August 2019. But just recently, the National Treasury of South Africa announced that South Africa's government debt will top 70% of gross domestic product in the next 3 years. Recent action from the big three credit rating agencies, Fitch Group, Standard & Poor and Moody's, have caused further panic. With this revelation put forth, is South Africa heading for a crisis? To help us understand what this means for us as a people and the rest of Africa, we have sought the knowledge of researcher and economist Moatlhodi Sebabole. He says, however, South Africa is not in a crisis.
I don't think South Africa is in a crisis. I'm saying this because a crisis can be explained by looking at different factors. You're looking at the fact that technically you are having negative growth for consecutive quarters in a country. Or the country, when it comes to debt, a debt crisis is where the country is not able to pay its debt obligations. So they're not in a position to repay the people that they owe, among other things. So if I look at all these different fronts, in terms of from a growth perspective, are we expecting South Africa to grow negatively even for the whole of 2019? No. But definitely we're expecting to continue to see slower growth coming from South Africa, as low as less than 1%, but not a negative growth overall. From a debt perspective, are we expecting that South Africa will not be able to repay the debt obligations that they have to pay? Again, I don't think that's the case. However, we actually continue to see that debt to GDP or the owings increase. We've continued to see pressure from the production side of South Africa. We're starting to see pressures in large state-owned enterprises, very key state-owned enterprises like Eskom, which produce electricity. And we know electricity is a key input for power generation. And we also then know that power enables for businesses to run in this day and age when we talk about digitization and all of the things that enable for technology. It actually, a lot of it relies on power, on stability of power, which is why it's a challenge when we see South Africa going through issues that are going through the power industry, particularly with Eskom. You look at also the aviation industry or the logistics and transport, and you look at the pressures in South African Airways, which is one of the large state-owned enterprises in South Africa. And the issues where we're seeing a bit of labor unrest there, demands coming from the labor unions or coming from the employees of the South African Airways. And on the other side, government saying, but we don't have enough actually to pay the wage increases that the unions are asking for. And actually saying that for us to continue to support South African Airways, we need to reduce the labor force. So these are the challenges that are coming from the South African economy, but definitely they are not anything close to a crisis. It's just the direction of the issues that are coming through from South Africa.
But then let us get to how that is going to be affecting us as Botswana and Africa as a whole.
Yeah, so let's start. If you look at from a sub-Saharan Africa perspective, South Africa is one of the largest economies in sub-Saharan Africa. And in context, is the second largest after Nigeria. In terms of purchasing power, South Africa's purchasing power is over $800 billion. In context, that compares to Botswana's around $40 billion. So you've got $40 billion purchasing power of a country such as Botswana. You're talking over $800 billion in context of South Africa. And because this is in purchasing power context, it tells you just how much money is circulating within the South African context, how much money government and businesses and private individuals are actually spending out of the South African economy. So if you've got an economy that spends 800 billion, you know, in the size of it is 800 billion, it tells you just the impact that they could have on their counterparties, on their trading partners. So it means when there's pressure from a trading perspective in South Africa, when there's pressure from the production side in South Africa, it actually has an impact, especially on its trading partners. And I'll start from the production side. I've mentioned there are some challenges with Eskom. We do know if you go 3, 4, even 5 years back, we had an arrangement where Botswana were getting a lot of our power as, you know, as high as 300 megawatts annually from Eskom in South Africa. That is no longer the case anymore. So over time, we've managed to, 1, increase our local production, 2, to diversify where we source our power from, particularly through the Southern African power pool. So it means, given what's happening now from the South African context in energy production sector, we are not as affected as we were a couple of years ago, where the country now as Botswana were used to a lot of power cuts because Eskom was not able to supply or meet the demand that we had as a country. So we're in a better position now than we were a couple of years ago. That's from the giving power as an example. And power is important, as I've already indicated. It's part of the supply side. It stabilizes your doing business, your operations. You need power to run in a lot of sectors, even in manufacturing, mining, to mention a few. And you go into other aspects of it. The relationship that we have with South Africa is the fact that we import primarily from and through South Africa. So from will be the direct products and services that are being generated from South Africa. Through South Africa is when we speak logistics. You know, if you're ordering your goods from the US or from China or anywhere else in the world, most likely they come through South Africa because, you know, we are a land access country. They've got access to the seas, and our goods come through the transport network, either by sea, by air, among others. So logistically speaking, we're also connected to South Africa because our goods do come from there or through South Africa. So should we see a disruption in service, it could be either from a South African Airways perspective, or it could be if there is an unrest that goes beyond just the aviation sector and goes into the postal services. We've seen before where the postal services go on strike and are affected. We've seen before where the logistics guys who are supplying fuel also sometimes go on strike or there are challenges and we don't get fuel on the side. Yes. So definitely when there's a disruption in the logistical side, it means the goods might not reach us here in Botswana in time, and that disrupts the flow of business and would have an impact. And we're not at that point yet, but should we see a disruption on the supply side and the logistics side of business in South Africa, because we still import a lot from and through them, it will impact doing business here in Botswana and from receiving our goods and services. The third one is on the financial markets aspect. The Pula currency is actually paired in a basket of other currencies. And one of those is the South African rand. Actually, the weighting of that is 45%. So essentially what then happens, if you look at the risks that are coming out of South Africa, is the fact that the debt to GDP is increasing, is the fact that the cost of debt is increasing. So if you've got a debt to GDP that's increasing, investors want you to compensate more, to give you more money. So which is why the debt service cost is increasing. Also, as a result of that, you then find the net effect of that is the value, the rand will then maybe take negative cost on that, and the rand will weaken as a result of this dynamics. The other key dynamic is, you know, we've got rating agencies such as Moody's, where there's still a risk that they could downgrade South Africa by March next year. So if they downgrade, it also means we'll start to see some further rand weaknesses potentially. So because of the Pula basket, where we tie to the South African rand through this mechanism, we might actually start to see the Pula weakening against particularly the dollar and the major developed markets currencies, simply because the rand will be depreciating because of these issues that I've been outlining. Not to the same level, but that weakness in the rand will impact the pula, where the pula might weaken slightly as against the dollar as the rand weakens against the dollar. The last bit that I want to bring again on this relationship is, you remember that Botswana is part of the SACU bloc, yes, the Southern African Customs Union. So this is a trading bloc where Botswana, Namibia, Lesotho, Swaziland and South Africa are members. And as part of this, the countries then do receive some form of fiscal revenues from this trading bloc, which gets distributed every year. So because of the size of South Africa, as I've said, they've got a purchasing power of 800 billion. It means among the countries in the SACU bloc, they actually do the most trade with other countries. So if there's issues, there's problems in South Africa of production, of trade come in, it means there will be less receipts into the customs union, simply because South Africa is not trading as much as they've been trading before. So if the custom receipts reduce, because Africa's trade is reducing, then it means from a Botswana perspective, we'll then maybe receive more, or rather receive less from SACU simply because of that. And this is important because when you look at the customs revenue that we've budgeted as a country, it's over 20% of our revenue. So if there is a decline, it means we might collect less than we had budgeted to collect in the year.
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At FNB, we're constantly innovating to help business owners at every stage of their journey.
Welcome back to First Issues as we continue our conversation on the South African debt crisis with economist Mwatfudi Sebabole.
But we're talking about this on a much broader sense. Let us understand it from how the common man on the street is going to be affected by this, if at all, anyway.
So three things. I think I've been talking at it from a country level and what it implies on the country. But as you're saying, because our economic agents, one includes businesses, two, it includes individuals, as you rightfully point out. So then going into the business level side, I think generally you expect three things to happen when you speak to trading on a certain country's money. So as I've already indicated, because we import a lot of our goods from or through South Africa, it means for importation we pay for our goods in rands. So with this outlook that I've already outlined, the fact that there's a risk that the rand could actually weaken as a result of all these other things that we've been discussing. So because a lot of our goods and services, we're paying for them in rands, those, especially the consumables and the food that you eat, and the logistics I've said, your parcels to come through, people buy furniture there. So it means there's a positive line in terms of how much price influence you are getting from South Africa. Because if the rand is weakening against the pula, then it means in pula terms you are paying less. And because we buy primarily a lot from South Africa, then it's a benefit that the consumers actually might get, either buying directly from South Africa or even the suppliers, local suppliers here, translating that benefit of a weaker rand to the consumer by reducing their prices, because they'll be sourcing the goods cheaper from a pula perspective. So that is the one aspect that we bring on board. So there's that opportunity. The second aspect is a man on the street, remember, doesn't just consume. There's an element of whether you've got savings in the South African market or in the South African context. So if you are consuming, if you are buying from South Africa and the rand is weakening, then you would pay less in pula terms. However, if you have invested in South Africa and you've got to realize your returns, this is where you've saved, because there are different ways. You could be a pension fund holder, have a pension fund that is paying you because of the investments that are made in other countries. So it means investments in the rand market might actually, if you are translating your investments back to Pula, your receipts might be lower, simply because you are getting from a rand that's weak and translating to a Pula that's slightly stronger, and then you might have that loss in value as you are transacting or getting back your investments in Pula terms. The third side of the coin, which is the middle part that I wanted to highlight to a question of what it means for a man on the street. So we've started by the one of the benefit on price, which could be passed on. We've got on to the one where you're dealing with investments and you might actually realize less value. But there's a flip side to this, because it means there could be where now the man on the street or the consumer sees more opportunities to do business in South Africa than in Botswana. You know, somebody all of a sudden deciding for leisure spending, you know, travels, Christmas travels, holidaying in South Africa because it's cheaper to be paying with your pillars in a rand market, which then means it comes with an opportunity cost. An opportunity cost of the money that could be spent here in our economy being spent elsewhere.
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At FNB, we're constantly innovating to help business owners at every stage of their journey.
This time of year is not only well known for its festivities, general hype and excitement for the year-end holidays, but for year-end double pays at work and Mithelo payouts. The sums are usually large, and some people decide to give themselves a pat on the back with a comfortable set of wheels for finishing the year strong, while others decide it is about time to buy that car they'd always dreamed of having for years, or really just getting an upgrade after a promotion at work. There's also that young professional couple who decided to expand their family and so need a bigger, more spacious car. Whatever the case may be, on many occasions the excitement of getting a new set of wheels clouds our judgments with regard to what could happen as soon as this asset leaves the showroom. Accidents like car crashes, fires, tire bursts, and even theft are all plausible eventualities. How do you prepare for these possibilities as a car owner looking to drive your vehicle with some peace of mind? Well, this is where car or motor vehicle insurance comes in. But what kind of cover do you need, and how much are you going to be paying, and for how long? To give meat to the skeleton we've already constructed is industry expert Mosadinkwe Musinyi, who explains all the terminology in motor vehicle insurance and which insurances are available in this market and how to determine which one would suit your individual needs.
So there are various types of car insurance. So we've got one that we call motor comprehensive. So we've got own damage, we've got third party, we've got third party fire and theft. So you can choose as you go along what you want to take. But comprehensive will include all of those things, yeah? So from them, then you can also decide, maybe I've got an old car, I've had this car for some time, then you decide to only cover third party. So third party means that you're only going to cover the person that you hit. So, but if you look at a brand new car and it's a finance vehicle, so most financiers will say to you, I need you to have insurance. And when they say insurance, they will be meaning motor comprehensive, because it covers everything. Similarly with other insurance policies, we've got terms and conditions. Again, it's important when you are buying, you need to understand the extent of your cover. What am I buying? What does it cover? You know, again, you need to read your policy. So especially with motor insurance, there's something that we call excess. People talk a lot about excess. Yes. So when you have an accident, you have to participate in the loss as well. So at the point of sale, your broker or your agent or whoever you are buying from should then also explain to you that this is comprehensive insurance. This is the rate that you are getting, as in this is how much premium you are going to pay. And then they'll also say to you, these are the conditions. One of those conditions could be, in case of an accident, you have to pay 3,000 pula as your contribution. So it's important to understand those aspects. The thing also to remember about motor insurance is that there are instances where it will not be covered. Like I said, policies have terms and conditions. So typically, if you're going to be doing something that is against the law, in insurance in general actually, you can't claim. Yes. So if you're going to be driving drunk and you have an accident, no insurer is going to cover you for that. You know. So if you are driving without a license, again, that is against the law. You're not going to get covered.
Before we part, we hope you've had a great start to the new year and are ready to tackle those yearly resolutions. We meet again next week. Till then, we wish you pleasant viewing. Goodbye for now. This program was brought to you by First National Bank of Botswana.
FNB, how can we help you?